everybody, and welcome to Profit Mission Control. This is Matt, and today it's Memorial Day weekend, and I hope everybody's having a great time spending quality time away from the stock market with their families and friends. I wanted today to go over the weekly recap for the week of May 26, 2017, and it has been a very unusual week from a perspective of the accuracy of my trades. So a couple of things to note. One of them was, if you look at the stock tweets here, kind of quickly, I'll go over through just a quick summary. It has been a strange week for a couple of reasons. Number one, I've over traded. I had 30 trades on the list, which is very unusual compared to my history since I started publishing these in October of last year. And I typically don't have a launch list for every single day, and the most I've traded is probably somewhere in the order of 20, maybe 15 to 20 trades. So this week has been unusual, the fact that I had 30 launches throughout the week, and I did publish a launch list every single day of the week. Now, the catalyst for that, or the main reason, probably was the fact that the market was hitting all-time highs. Subconsciously, I wanted to capture that opportunity. There was a lot of momentum in the market. There were several micro cap and small cap stocks that made multiple 100% kind of moves in one day, maybe 100 to 200% like SPI and others. So it felt that the momentum was there in the market, and it was worth trying to go after a bunch of large opportunities. However, that adds a lot of stress. It also adds a lot of, loose breaking of some of the rules, and being more relaxed in how I choose the stocks that I put on the launch list, and it shows in the accuracy. So I would say it's a bad week from perspective of poor trading accuracy, meaning that the number of losers were more than the number of winners. However, I ended up the week still profitable. And the main reason for that, which I explained again here on the prior post, or the former post, was the risk management. So this is a topic someday I want to dedicate an entire video on, but there is a strong relationship between the profit-taking accuracy, so how good you are at taking profit. For, like, say, for every 10 trades you take, how many of those are actually profitable versus how many of them are losers. So there's a relationship between that accuracy and actually your profit to risk ratio on every trade you take. So I'm not going to go through the details of that relationship, but it's a mathematical relationship, and if you plot it, it looks like this. And basically you try to match your accuracy to the profit or risk ratio that you take on every trade. The red area is the losing area, or the losing zone, and the green area is obviously the winning zone. And even though, if you notice here, even though if your accuracy is below 50%, 40%, 30%, as long as you're taking the profit risk to ratio, understanding that you need to be above 200%, maybe up to even 300%, you're still going to be a winner. So even at 30% accuracy, if you hit 250% or more on the profit to risk ratio, you're still in the winning zone. So for this week, our accuracy on the launch list was about 43%. But since I pick 99% of my stocks above 150% profit to risk ratio, I still ended up in the green. So it was a small profit. Based on this chart here, we ended up about 1.5% overall for the week on a profit per trade. Where did it go? There we go. Here. So we were only about 1.5% profit per trade on average. And however, if you look at the actual profit winners versus the losers, we've had a bunch of good winners, giving us 15 to 13, 10% double digit profit taking, and all of our losers were less than 5%, to the range between 2% to 5%. I actually cap it at 5%. The only stock that I violated the rule on was BBG, and it slipped a little bit more than the 5% loss max that I have on a specific trade. Not only that, the actual profit to loss ratio on this one was below 100%, and I'm not sure how or why it slipped through my rules, but it did, and it ended up showing. So what I wanted to do today is actually go over a bunch of the trades, and I want to really focus on the losing trades. So I spent most of the morning today going through every pick and trying to understand and analyze, was it something sloppy on my part, or was it really the market, or was it really just bad luck that I had good selections but the market didn't go the way I wanted to go. So quickly before I jump into that, if you're new to the channel or the first time to watch this video, just want to let you know I'm not a professional trader by any means. I'm a retail trader. I'm not a financial advisor, and the information that I'm showing here is just really for educational purposes. It reflects what I personally do and some of the things that I personally find interesting and good trade opportunities, but it doesn't mean that you take this information and act upon it without consulting with a financial advisor or an investment guru, which I'm not. So just want to make sure that everybody's aware of that. I'm an engineer by trade, and I do trading on the side, but I enjoy it a lot, and I think I'm learning more and more as every day goes by. So having said that, let's move on to the actual list. So quick summary, like I mentioned, there was 30 trades total this week, and 17 of them were actually losers. Only 13 were profitable, and again, I explained why I ended up still in the green. Not a whole lot of profit, but still overall I didn't end up the week green, and that's the name of the game. I mean, your goal is really to make sure that you end up every day, if not every day, at least every week, profitable, and the way you do that is by proper risk management. I spend a good amount of time picking these stocks. I spend a good amount of time ensuring that the profit to risk ratio is above 150%. In, like I said, 99% of the cases it's above 100%. In the past, especially maybe last year, I was slipping a few that were under 100%, and this year I think I only did it once or twice, and BBG happens to be one of them. So I want to make sure that you guys understand how important that is from a winning perspective. So like I said, instead of going through the winners, which we had a lot of good ones which had double digits, I'm going to start going through the losers, and I put some notes as to why I thought maybe the choices I made were not the right one, and we'll walk through some of those right now with you guys on the charts. So let's start. Our first stock was, or our first loser stock was HK, and I'm going to switch to the chart. So go to the chart here and go look at HK, and the HK went on the launch list for May 22nd, and the reason was just looking at May 2019. It came up on my scanner. It looked like it was about to challenge the 50-day moving average. It was staging an uptrend above average volume, and I looked at what was the natural resistance level to break, and I said it would be somewhere over here. Now, if you look back on the left, it was very congested. So taking, for example, an entry right above this green candle, moving it or riding it to maybe to this level was not enough profit to be attractive. So what did I do is I said, if I cleared this resistance level here, it does have some opportunity to potentially go somewhere and challenge this area. Although the 200-day moving average was trending down, and the 100-day moving average was trending down. And that might be basically my mistake. And there's a couple of things. First, that these daily averages were actually trending down. None of the other averages were trending up, maybe other than the 9-day moving average, which was starting to perk up. And the other thing was my selection of the profit zone. Realistically, if we break this resistance level, the next opportunity would be here, and not necessarily all the way there. So it was probably, in hindsight, I would say we should have paid careful attention to the resistance levels, maybe careful attention to the downtrending moving averages, and just should have passed on this, not even putting on the list. So that's something that could have been avoided. Next one was ROX. So if you go back to our list here, the next stock on the list was, or the losing one, which was ROX, and that one was published on the list for Friday, May 26, with an entry at 2.07, profit target at 215, and a loss abort price at 202. Looking at a 4% roughly profit target with 160% profit to risk ratio. So that one, as far as I could tell, had all the proper things going for it, and there was no reason why it should have dropped other than just bad market luck. I had it on the list, like I said, on the 26th. Looking at the 25th, very strong move with above average volume. It's clearing all the daily move averages were trending up. It had this uptrend channel, which we were far away from. And if you go back in a long, look all the way back to the left here, we cleared this resistance. So my profit window was actually to break above the resistance for the prior day here. So with an entry around 207, like we mentioned, and profit target 215. And unfortunately, let me see, I think this is a little bit shifted up. Sometimes when I rescale these, they tend to move. There we go. So so the entry was made at 207 with the hope to go to 215, but as soon as it entered, it failed and it just sold out miserably. Nothing I think I would have done differently, so this is just pure bad luck. The market didn't basically give me what I planned to do. The next one was FOLD. FOLD was a stock that we traded in the past, and I believe it was a winning stock. It continued its uptrend after gapping up here, traded sideways, started staging some uptrend again, and it went on the list on 5/23, May 23rd, after basically this action here. So it came up because of above average volume, and it was looking like if we broke that prior day's resistance with some conviction, we had a nice gap here on the left to fill, and the opportunity was as high as either the solid bar or partially within that wick, which usually the wick represents noise. So you could be, if you're very conservative, put your profit target at the solid part. If you're a little bit less conservative and more ambitious, you maybe push it all the way to the top of the wick. I chose somewhere in between, and it made the move I expected. It didn't quite touch the profit target, and guess where it stopped? So if I were to plot a horizontal line, where it stopped here, it's very close to the body of this. Let me just mark this as yellow so it's more clear for you guys. Where it actually failed or stopped moving was right at this resistance. So it's the actual bar or the solid part of the candle. Now, I would say the other part was greed, because it made it to this high. I held on to it. By the end of the day, it closed at this level, hoping that next day will continue. but it actually opened gap a little bit lower and crashed. So that was a loss. Hindsight, I think, is greed and not recognizing that I should have taken profit when it hit this resistance level. So I lost that on that trade just because of a couple of things that went wrong. Next one was GSB. So GSB was a stock that went on the launch list for this date here, which was May 22nd. And that's actually the day that it, let me double check here. That's the day that actually launched. And I think my mistake there that was that the profit window was way above the actual price when I actually published it. And it requires a lot of energy or momentum to get to that price before it even breaks it and gives me my profit target. In terms of levels of resistance, if you go back all the way back here, the idea was that if it broke this level, let me go back to this here and show you maybe a little bit closer. If it broke that level, it had some opportunity to this level of resistance to give me a good profit window. And the fact that it actually broke this uptrend channel as well was a good sign. Looking at the volume, daily volume, it was the two very high above average volume days. So the logic was sound. The only problem was that I was entering at a point that was way higher than this level here. Instead of saying breaking this level of resistance, which would not give me a good profit potential, I waited for it to break the channel, but it didn't quite run all the way. It gave me probably half of that profit. I could have taken it, decided not to, hoping that it would continue, but it didn't. So I think my lesson learned on this one was the fact that the profit window was far away from the price of the day prior, and I was too ambitious, hoping that it would actually break this level and continue, but it didn't. It pulled back, and it might as well try it again. I think there's nothing that says it wouldn't. It's really above all the daily moving averages. It's in a confirmed uptrend just based on this channel. If you imagine drawing another line here, you'd also see probably an uptrend as well. So just bad timing and a profit window that was far above where I should have put it. So next one was ELGX. That was another losing trade. And you can see right away the chart is ugly. The stock itself is in a downtrend. So the question is, why did I put it on a launch list? Well, the reason I put it on a launch list was because it looked like it was staging a reversal after this huge gap down and a failure to recover this day. It started slowly going up, and it came from my fueling up scanner in Trade Ideas. So I put it on the list for this day, which was May 25th. It did launch on May 25th, and you could see it barely launched. And I had entered that trade and hoping that it would break this resistance level, which was my entry point. If it broke this day's high and this day's high, then it has nothing but this huge void. And like I said in the past, I target about 6 to 8% profit target. The fact that the 9-day moving average was also coming into this zone, so that was a natural profit window. But like you see what happened, it just barely broke through that resistance level, but crashed back, and the next day it sold off. So it's still on low volume. I think it's going to take a breather and maybe potentially go up, but the fact that it's in a downtrend and that all the moving daily averages are downtrending and this huge gap makes it just harder for us to make any profit. So in hindsight, I would say the weakest point was the fact that it was just a weak stock in a downtrend. Should have avoided it, maybe waited for confirmation to break this level, ensure that we are in a gap filling area, maybe have broken the 9, give us maybe a window to the 20. but as a day I chose it, probably maybe could have skipped it. Next one was ENT, so that's another losing stock here. And you can tell again the moving averages were all sloping down, so it's really in a downtrend on the big picture. It is showing the reason why it came because it was on a trend reversal, and it was showing as a fueling up stock in my scanners. It obviously did stage a nice reversal here with a few green days, slightly above average volume, and I put it on the launch list after it had broken the 50-day moving average, made a comeback here, broke this level of resistance, and the logical thing was saying, okay, well, I think if it breaks this level here, then it would probably try to fill this large gap. Now, again, that was too ambitious. When it broke through this level here, it did it on barely above average volume. It just didn't work. So I would say it's a combination of the fact that it's still in basically a downtrend way below the 100 and 200 day moving averages, but the logic itself wasn't that bad, and the actual resistance levels and profit target levels were not unrealistic. Just bad luck. And again, this one is showing a little bit, you can't tell for it really, but it did actually break that level. So ENT did pass through the 354 on 5/23, which was this date here. Maybe if I zoom in a little bit, you might see it. Let me make sure this window is correct. Yeah, 354, 375. So it's one of those things that basically touched it. Maybe if I go to 15-minute chart, it'll show it better. Yeah, maybe I just basically tapped it and I entered and was the wrong entry. Next one was USAT. And let me back to the 1-day chart. Oops. So USAT had everything actually going well for it. It just didn't work out. If I look at it, I think I wouldn't have changed anything. The stock was above its daily moving averages. It was trying to stage a trend reversal up, and it went on the list on 5/25. Obviously, this strong green candle with above average volume gave me the idea that if it broke this level of resistance, we have this nice gap to fill and give us a profit window. So it broke through it, but it didn't go, and I don't think I would have changed anything based on this level. I don't think there's any lesson to learn from this one, and it was just a normal trade that would have been a losing trade anyway, although I've picked everything correctly in my opinion. The next one is IPAS. So this stock was breaking the 200-day moving average. It was staging an uptrend. We had 4 or 5 beautiful green days breaking through all the moving averages, the 920, 50, sorry, 920, 100, and even the day before I put it on the list, it broke through the 200-day and gave it back a little bit. So the 200-day moving average is really a big telltale, and you can know, and it really is kind of like a magnet. Stocks either break it and run away from it, or break it and just get pulled back to it. And the logic there was that on this day, if it I was going to put on the list, I say if it clears this wick level, which is still in the gap filling area, it has an opportunity to go all the way maybe to this prior resistance level, especially that it broke the 200-day. So like if in the next day it's successful in breaking the 200-day and moving forward, breaking this level, then it has a potential to go and get this profit. So it did break the 200-day moving average, it did break through this resistance level, but barely did it. Very, very small little wick there, and then it gave it back all. So I would say my fault or my error there, it was basically too ambitious. I would say the other thing was that I looked at the loss, potential loss, what's the natural support level, and then based on that I built my profit window, which usually I don't do that. I usually say, okay, what is the profit window, and then based on that I say, okay, what's my maximum acceptable loss, for 150% profit to loss or 200% profit to loss. So it was too ambitious that it would fill this gap and go all the way there, versus in reality I would say it would have probably, this would have been probably a more proper resistance level to target as a profit window. But if I did that, my profit to loss would have been small. So I kind of violated my rule and said, well, if this is my loss window, maybe if I double it, then I'll be okay. And it has the potential, but just the momentum wasn't there. So it broke the 200-day, gave it back and corrected, found support the 9. So I'm not sure what's going to do in the next few sessions. It might continue to go back. If it goes back, I think an entry at the 151, 152 level might give us some profit to the 155, which is not a huge profit. But if you're able to take it quickly, it probably is not bad. I think the big opportunity is once it clears all these congestion here, it might continue to go higher. We'll see. Next one was SPWR. So another losing trade. This one is another case where I believe I violated the proper resistance level and was too ambitious on the profit window to reflect a good profit to risk ratio. So I marked here this yellow line. So logic why I put it on the list was it broke the 200-day moving average. It was trending up. All the daily moving averages are going up except for the 200, but it did break it. And I saw it on this day here and said, okay, the natural thing is if it breaks prior day's resistance, what's the profit target window? So before I looked at that, I said, well, how much could I lose on it? If I lose this much, if this is a support level down here, based on this level in the prior days, and I think there was a logical intraday stop as well based on the day here. I can't remember exactly. I think it was this level that I chose. But anyway, the point was I chose the profit window based on the loss potential and trying to maximize my profit window. So I gave it to this level of resistance, but however, this is where it stopped. So it triggered, it hit this level of resistance, which is actually the top of this candle, and then gave it back. So again, my wrongdoing here was being too ambitious, looking for this window versus this window. If I had stuck to my rules and said this is the next level of resistance, the profit window would be very small. I wouldn't even consider it, because if this is my profit window, my loss window would be very, very small, and it just wasn't a good choice at the time. So having said that, now I think if it does break this 849, 850 level, it probably has some potential to test at least the 880, which gives you about 40 cents profit. It may not be very strong either, so you might just have to wait till it breaks, this level here, and then you have potential maybe for another 40-50 cents move. So anyway, I think the lesson learned for this one is just not cheating myself into trying to force the profit based on the hope that it would go to a higher level of resistance, blasting through this one. But in this case, it didn't work. So I'll be probably more careful looking at these levels. Next one was PSDV. And I have a history with PSDV. I mean, probably 3-4 years ago, I traded this one, and every time I trade it, I lose it. It always seems to be stuck at this level. You know, historically, tried to go through there several times, never worked out. If you go way back, you know, years, I think it was here again. And this is probably the area where I tried to trade it before, and it always got stuck in this level, never seemed to break through. And you know, I wasn't too crazy about the stock, but they had some good news, and it seemed like it was moving up a little bit. It came up on our scanners. It broke this downtrend channel a few days earlier, and I saw it on this day with this huge candle. So I put it on the launch list for May 8th, and let me see. No, that's a prior window. Sorry, here on the 22nd. So yeah, it broke this through this level of resistance from the past, and it looks like it's attractive if it challenged the 200-day moving average and broke through it. So on this date here, I put on the list for the 22nd and said that natural level of resistance if it breaks the 200-day moving average with conviction. And then I think it also reflected some level here of resistance right there, this wick here. And if it did, guess what? You know, the natural resistance would have been this solid candle, or at least this wick here. Again, I was too ambitious taking all the way up there. And it didn't work. It just broke through that rev level, small wick, and then gave it back all back up. So bad timing again, based on being too ambitious and not paying close attention to the actual resistance. Or like I said, I pay close attention to the natural resistance based on what the historical data tells me, but kind of like cheated myself saying, well, it could potentially give me this profit window to justify this loss. So just, you know, continued lesson to be learned on that one. Next one was SNAK, I believe. SNAK. Oops, looks like I put an order by accident. Oh, this is a paper trading anyway, so I'm not too worried about it. All right, so SNAK, so that one was a stock that again lost, and I think my notes here, let me talk about why we put it on the list. It was trending upwards, but if you look at the volume, not very strong volume. So probably in hindsight, that was probably a poor choice. However, it went on the list for this day saying that, oh, it's not really breaking this day resistance. So my logic was, if it broke this area here, it has a nice gap to fill through here. That was basically the idea. But in order to get there, it would take a lot of energy to get there. Plus the fact that the momentum was not very strong. All the moving averages were still sloping down, although it was kind of starting to reverse upwards. But again, it broke through on this date here. It launched on the 24th, made a quick move to 462, but then gave it back, and I had to bail out. So I would say definitely the volume was suspect there, and again, the trending down daily moving averages. So if the daily moving averages were trending down, but I had a lot of volume, that confirms that the uptrend is strong and there is some, you know, strong demand for it. It wouldn't have been a bad trade or a bad choice, just because it was a logical level of resistance to break and to try and profit from. So just another losing trade, another lesson learned. FMZN. And that one I kind of was hoping for better results, because this is a proper setup. I mean, it's breaking long time resistance levels. All the moving averages were strong, trending upwards. And if you go back, you had to go back all the way to 2014, which was, quite a while back, to say there's hardly any resistance on the uptrend. So it was a strong move. And then if you look at the prior days before it went on the launch list, we were just blasting through resistance levels like crazy. And the average volumes were very, very strong. It was pretty much dead all this time. And then if you look at the daily averages, we were spiking 4 or 5 times above the average, and just very attractive. So on this day here, I said to myself, okay, if it breaks this level of resistance, which was, back from 2014, it has room to go all the way up here. Now, I would say in hindsight, I think the choices were all good. I think I should have left it another day to confirm that it would break it with conviction. But again, sitting here at this day saying that I'm going to wait till it breaks this level, and when it breaks that level, I'm going to enter, was a little bit too far away from, the day that I saw this stock. So although it had this huge momentum, for whatever reason, the momentum decided to fizzle, and it made the entry. I made the entry here, quite didn't get all my profit target, and it just gave it back and stopped out. So in fact, yet on Friday, this one I traded intraday, independent of the launch list. I traded it actually as a reversal because it showed up on my one of my intraday scanners when it actually made this huge drop. And I have a scanner that tells me when these kind of drops occur, and a very natural bounce is expected at the prior day support, whatever logical support level would be, and that's exactly where it bounced. And I did make a quick trade on this intraday from the 266 or 267 level all the way to $3. So it made it all the way back here, and obviously it pushed even, I think it pushed higher. Remember the actual intraday chart. Yeah, so when it made this huge drop here, I entered around this level and rode it all the way back to $3. So it was kind of I made my revenge on it, but it wasn't part of the launch list. It was just an intraday trade. And so again, in hindsight, I think the only problem was just it was just too ambitious. I don't think I would have changed anything. I don't think I want to change any of my rules from this particular one. This one was a good choice. It just was a little bit too far away from the entry price, and the momentum died. Not last one. Next one is PTI. So again, there was 17 losers, so I'm going to go through all of them. If at a point you get bored, you can skip forward into the video. But so PTI, again, just without looking at it, it's a downtrend stock. So PTI is actually a stock I traded back in late March, I believe, here, the day it had this bad news, and I thought there was going to bounce. I lost money on this one on intraday level, and I kept watching it, and it was just a downtrend. It was continuing every time it tried to stage a comeback. The sellers would come in and just knock it down further, and continue the downtrend. And then I had an intraday scanner here, I believe, on the 22nd or the 21st. I might have put a tweet on it on Stock Tweets. But it confirmed this breaking of this downtrend channel, and actually it broke the 9-day moving average. So that was a good sign. And once that happened, I said, okay, I'm going to put a watch on watch, and the next level to break would give me more confidence if it proves itself as it's really trying to change the trend. If it broke this level of resistance here, which is this wick, it has potential to go to test maybe this level here. And I think that was also equivalent to testing this 20-day moving average. So other than the fact that all the daily volumes were going down, it wasn't a confirmed uptrend. And the intraday uptrend reversal or trend reversal scanner I have, which I call the course correction scanner, historically I back tested that. It usually gives me between 10 to 20% move, 10 to 12% move. So that was another factor what I considered, is the fact that it showed up on that scanner. It was showing kind of a trend reversal, and it had a good potential opportunity for profit. The problem again is timing. I entered this trade here on the 24th, and on the next day I had to bail out. But having said that, I think this stock should be on your watch list. I'm not sure if the selling is done or not. The only way you can tell, if it reverts back and maybe breaks through this yellow line again, then I would say that the trend has been broken. It may decide to just trade sideways for a while, but I think it has the potential to bounce back up, at least breaking through, testing some of these levels of resistance. Maybe this level here, which not so far away from the 50-day moving average. But anyway, it's a trade that didn't work. I don't think I did anything wrong in any way. I trust this trend reversal intraday scanner, and usually it works. In fact, it has a high probability of success, somewhere in the 70 to 80%. So it just didn't happen for this stock, and it was a losing trade. Next one was ADMP, and ADMP was a stock that is in a gap fill potential area. Here it has a gap from the 440, 435 level. Dropped in one day all the way back down here to 352. It's traded sideways. It looks like if it broke this resistance, it has potential to gap fill. And it went on the list for because it looked at these two green candles, looked like it might be trying to stage this comeback. So I put on the list for May 10th. So it was one of those stocks that stayed on the list for a few weeks, with the hope to break this level of resistance, which was a good choice and a good profit window. So I don't regret the profit window or the resistance. However, the only thing was this 50-day moving average was in between. So like I said, I put the typical 6 to 8%. Ignore the fact that this purple line, the 50-day moving average, was there. It eventually triggered on 5/22, and that's when where's ADMP, just to make sure. Yep, it was on the 5/22. It broke through the resistance and took the trade. It actually blasted to the 50-day moving average. Wasn't too, I guess I was too greedy and didn't take profit. Could have taken profit here, probably 3/4 of the way, but decided to give it back. And then the next day it crashed and had to bail out. So I would still keep this on your radar. Now I think the next level to break is the 420, 422 level. Probably has room to go to test this level here. So about 20-cent move, which is not too bad for a $4 stock. But it didn't work out. I wouldn't say this was in particularly a bad choice. If anything, my only mistake was I should have put the resistance level at this 50-day moving average, which would probably give me a small profit window, which I wouldn't even consider. So yeah, I would say this is a 50-50 mix on whether it was a good trade. The fact that it actually triggered and then I wasn't greedy enough, or I was too greedy not to take profit, was another mistake. So another lesson learned there. I try to do my best. I mean, in most cases, I'm good at exiting a stock when I feel that it's not going any further. And you can look at the statistics and show, there's a bunch of trades that I take that never hit the profit target, the original profit target, but I end up still profitable. In this case, again, maybe because I had, 5-6 open positions at the same time, just get distracted. And I guess the overarching lesson is not to trade too many stocks at a given time. And certainly 30 trades this week let alone all the intraday trades that I take, probably wasn't a good idea. So just lesson to or message to myself, limit the number of trades. Next one is VNCE, and that one, I can tell you, this one was definitely no. I don't, if you notice, through 2017, I shy away now from any stock that's below $1. The only reason why I put this one was the fact that the day prior, the stock SPI, let me bring that up here, and most of you probably have heard of it, or why does it keep placing orders? Oh my gosh, must be clicking something wrong here. So the stock SPI did this crazy move, obviously, on the 25th. So it started around 45, 50 cents, and one day made it all the way to $2.40, which is insane. And the market has been waiting for this kind of momentum move for a while, and we start seeing it now. Does this tell us that maybe the sector is going to be, there's going to be a lot of sympathy plays? We'll have to wait and see. But the fact that a stock that was sub-dollar made it all the way to $2.50, blasting through all the daily resistances, was kind of attractive for VNCE, because although it's not in the same sector, but there was a lot of chatter on the social stock media like stock tweets. So, and I said, okay, there was a lot of chatter this one. Maybe I'll give it a try above 66 cents. If it broke 66 cents, was it 66 or 55? Let me double check here. I think it was, 66. Above 66, it has potential to go to 72, which was kind of basically filling the part of this gap. And I think, again, that's basically my standard. I put 9% actually profit window on that one. Maybe it's too ambitious, but the fact that it was a sub-dollar stock usually warrants that. But it barely broke through 66, and then it gave it back, and I had to exit. So it was only like $60 or $65 loss on that one. But if you believe the chatter, some people claim it's going to blast through. They believe this going to blast through the 72, maybe make it all the way back to $1, which would be a huge move, obviously, because there's a gap here to fill. But again, I violated my rule by trading something that's less than $1, and it was just a sympathy stock choice. I think I should have not done that, but I did it. It was a small loss, no big deal. Number 16, which was POLA, and POLA, it came out of the trend reversal scanner again into Dre, but I think my profit window was wrong. So it broke down this downtrend channel. It broke it with huge volume, and I got my attention on this day here, and the logical choice of the resistance to break was both the 20-day moving average and the top of this wick on this candle. So I think the choice of the level to break was correct. The choice for the profit window was incorrect. So if you look back here, breaking this level, the next level to see would be either the body or the wick. And guess where it did? So it did trigger. I did take the trade, but it failed to break the body of the candle, which in this case should have probably been a proper resistance level, which would have given me a small profit window, which I wouldn't have taken the trade or even considered it. So I would say the stronger, I think, especially if this is a downtrend that's reversal, maybe the natural resistance to choose is the body of the candle, not the wick. And like I said, it broke through it, hit it, and then I stopped out, loss on this day here. So And then the last one we talked about early on was BBG. That was a losing trade. The main reason was, first of all, I chose the wrong profit to risk ratio, which was, I think, less than 100%. I think it was 84%. Not sure how that slipped through me, but again, this was on it went on the 22nd. It was last weekend when I was doing the watch list, and I had a lot of stocks on the watch list, and not sure why I chose a low profit to risk ratio. Maybe I was half asleep, but the natural break of the resistance level, which was this one, which was not too bad. Like you see, it basically, I entered the trade, it tapped that resistance level. Maybe should have waited till confirmation, but this was a trade. I think it took a while. It tapped it, I broke, and I bought the stock, but it never moved forward, and it gave it back all the way back. So 2 lessons: obviously, don't violate my rule of the 150% profit to risk ratio, which would have probably not worked for me if I had stuck to that. And then the fact that, again, all the daily volumes or the daily averages were trending down was also a bad sign. So that's it. That's all the losing trades. I think if I would summarize it, I put 3 notes for myself. Is to pay more attention to the moving average directions and be more suspicious about stocks that are in a downtrend. So like this case, this is a stock that's in a clear downtrend, but it's trying to stage back a reversal, which may or may not work. So if it's staging the reversal and it's still far away from the 100 to 200 day moving average, be more suspicious, at least be more accurate in the prior resistance levels, and consider only a true profit window where you have a good sizable amount of profit between the price that you want to break and the next resistance level. The second note I said to myself was not to publish or choose a stock if the profit window is far from the entry price. So if, like a couple examples I showed, that in order for me to start to be profitable, I have to wait for the next resistance level to break, which is 10, 20, 30 cents away from the day's price. I should probably wait till it get there, because there's going to be a lot of energy that needs to move that stock, and basically a lot of buying power or buying pressure. And then even when it gets to that level and I expect it to break it and even make profit on it, it's probably too ambitious. So just shy away from those kind of opportunities. And then the third note that I put to myself was to reiterate my rules and stick to my rules to basically choose the profit first and then look at the natural loss, maximum loss allowable, versus saying, oh, here's my maximum loss allowable. Can I hope that the profit would go, twice as much, or 1.5 times as much? So I think there was a couple of cases where I did that. I typically don't, but again, like I said, this week was full of potential. The fact that the market was staging new highs, and I was trying to maximize on that opportunity, and I might have violated a lot of my rules, and it showed on the accuracy. So having said that, the main thing is always to look back and to analyze the trades that go wrong and try to say, okay, can I add, did I violate any rules? Could I add new rules? Were they just bad trades that didn't work out? And in some cases, I thought the choices made here were good, but in others, I think there are lessons that I could learn to improve on. All right, next, quickly, we're going to go through. Sorry, this is wrong. Here we go. Just to kind of recap, like I said, although it was a poor accuracy, we still managed to push a little bit above 80. Last week was 180K for the portfolio. I think they added about 6K this week. So again, it wasn't a red week by any means. Just the fact that there were a few winning stocks, and I might have skipped on that. So let me go back. and talk about some of the winners. I'm not going to go through all of them, but again, it's kind of to confirm whether the rules are correct or not. So let me go back. So CNAT, that one was a good winner on Friday. It had everything right going for it. It was in a clear uptrend right here. After trading sideways, it broke through that channel and moved upwards. It cleared all the daily moving averages. You know, the 9 above the 20, the 20 above the 50, the 50 above the 100, and the 100 above the 200. You know, picture perfect move. It's a stock that's known to make, you know, a good 50 to 60 cent moves on a daily basis. So after it made this move on back in April, well, let me see, am I looking at the right? Yeah. So it went on the list on the 526. Oh, I'm looking at the wrong date period. Oh, sorry, it's totally the wrong chart. CLNT, that's why I got confused. Sorry, so CLNT, yeah, it had all the right things going for it. It came on, brought my attention on this date here, just the fact that it had a strong move, maybe less than below average, but it was healthy move above all the daily moving averages. And the intent was, if it broke this level of resistance here, it has a window either, you know, to the body or to the wick. So I chose somewhere in between, and that point happened to be if you look at this prior resistance level on a channel perspective, you know, it had crazy moves here. You know, $4 or $5 move on April 7th. It had a you know, $2 or $3 move on May 9th. So it was kind of forming this level of resistance, and it looked like it was kind of getting ready to do that move again. So I put it on the list for the 26th, breaking this level here, and I said, okay, somewhere in between the body and the wick, and it happens to be the point at this level here. That was my profit window, and exactly that's what happened. Now, it did actually intraday move all the way to 550, and I think I pushed it a little bit beyond that. So I did take it all the way to 515, somewhere over here. That's where I took the actual profit. I think because of the intraday chart, it looked pretty good. It broke through my profit window, and it continued to go. There was no reason for me to bail out of it. It tapped it here. It was looking strong, holding above the 9 on the intraday chart. And then the spreads were kind of crazy. And I think basically what it did is I didn't sell here. I got nervous on this candle, and on the next candle it made a move, and I took the profit around 515 here. So that was a good trade. ROSG. Let me go to the daily chart on that one. So ROSG, same uptrend, came on my scanners the night before. It was breaking the 9, had an opportunity to go to the 20, and that's why I had my window. Basically, if it broke this level of resistance here, which is this level and this level, it had opportunity to go to the 20, test the 20-day moving average, and that was, you know, enough. Given that it was a $1, you know, $2 stock, a move of 15 cents would give me a good 8% profit target, and with a risk that is, you know, like 2 or 3%, and it worked out pretty well. So that was a good trade as well. CAMT. So CAMT was, it came from multiple sources. Obviously, you can see it's a very, very strong stock. These levels it hasn't seen in probably 3 to 4 years. You had to go back all the way back to 2014. So it had everything going on good for it. It fired up on both my night scanners, intraday scanners. If you go to I go every day to the Trade Idea chat room, which is a free chat room by the way, and I recommend everybody to go and check it out. I'll put a link down below the video. It's a free chat room, and also my intraday scanner. So it fired up on 3 or 4 different intraday scanners, and it was a clear choice to try to put on the launch list. So after this day here, I put it on the watch list for May 24th, and it triggered on May 24th. The idea was breaking this level of resistance here and trying to test that day, because the stock was just very strong. I can't tell you how many times it fired on intraday scanners. So the idea there was to, if it broke, so this day here, it went all the way to this high and then gave it all the way back, and it ended up closing a little bit lower than this candle here. So the logic there was, if it broke this level here, it might, given that it has momentum, it might continue to push through and break this candle high. And I think I tracked back all the way, like I said, to 2014 as my natural resistance level, and it worked out very well. And in fact, I held on to it to the next day, taking all the way to 625 level. So over here, actually somewhere over here, yeah. And so very solid win. I think this stock has no reason to give back. It might fall back and try to correct maybe this level, or even all the way down to the 9-day moving average. But it's showing very strong strength to continue, solid strength to go continue maybe higher. But for the time being, I'm out of it. I think I'm gonna stop there. There are a bunch of other ones. TANH was a good trade. Again, above all the daily moving averages, natural resistance to break, and profit window, which seemed to be appropriate, worked out fairly well. Mankind, so that one was kind of tricky, because that one touched our 148 entry on the 25th. I had this actually on the launch list since the 23rd, just because the strength it showed on the 22nd, and that would be the natural level of resistance, and it had a window to go to this wick, to the solid body or somewhere within that wick, which was plenty for a 7 to 8% move. And it touched this briefly on the 25th. I didn't get a chance to enter it, and on the 26th it did break it. Took the trade. It just continued to go up, never looked back, and I exited right at I believe for Mankind, 163, which was my target window, target profit. If you look at this channel here, that's where it actually found resistance. So, I mean, sometimes these channels work also to determine where the stock might stop going up, and that's exactly where it stopped going up. So now, if it breaks it, that would be very attractive stock, and it might actually go to $2 range to test the 100-day moving average. It's been staging fairly high volume over the last few days and weeks, and it's definitely showing a trend reversal here after trading sideways. This day was the day it broke through, moved up, corrected a little bit, moving up again. So I said I'm not going to go through any more, but I think what else we have? IMDZ. That's the stock we traded in the past. Healthy uptrend, very strong volume. Went on the list on the 22nd. The plan was to break this level of resistance here and push to this level of resistance here. So I would say in hindsight, probably I should have waited to break this level here. Not sure why I decided to do it at 768. It might have been an intraday high that I thought was reasonable. Oh, right here. I'm sorry, I'm looking at the wrong place. Yeah, so it's just breaking this level here, and with a potential window, again risking it. This would probably have been the natural one, or I should have waited this one, but with the momentum, it had the potential to go here, and in this case it worked. Maybe it worked because it was above the daily moving averages and the average daily volume was strong. So it was kind of whippy, but still it made the move that I wanted and got out of the way. So took the profit, went out, and then USAK was pretty much, if I remember correctly, a stock that, yeah, it broke the downtrend. It came up on the intraday trend reversal scanner, and I said that one is fairly confident that it makes a 10 to 12% move. I targeted only about a 4 to 5% move just based on the natural level resistances that it had in prior history. So it got my attention here. It actually broke this, and that's why it got my attention, because it showed up on the intraday scanner. And then it looked at, say, okay, which level it would break if it broke this level, what the potential is. Now, based on my rules, I would say the next level would have been here. But based on my performance of the intraday scanner, I knew that it could move a good, 10%. So I ignored, in this case, the natural level resistance. I looked at, say, if it can make a 10% move, where can it go? And I chose this level here, somewhere between the noise of these wicks and the solid bar there. So in that case it worked. Was it luck? No, I think the main catalyst for me was the intraday trend reversal scanner. So that worked pretty well. And YRCW, that one was a 6% winner. So this is a case where we had a gap down, trend reversal, trend down that reversed, broke through the 9, the 20, came to my attention on the 9th, and I said, on the 19th, and I put it on the 22nd, which was last weekend, with the goal that it breaks the 20 moving average and a 6% profit target, filling this gap here. And so that would have been the entry, and the 6% actually took us to a little bit below this top of the candle. So it moved, it triggered here and moved, continued to move upwards, almost topped out, but found support and just continued to move, and I took profit here right at this 970 level a few days later. So that one was a multi-day stock, and I think, I had published it several times during the week saying that I'm still with Flight and still in that one. CO, and I promise this will be the last one I'm going to go over. CO actually triggered, that's the China cord blood, and it seems to be very, very strong. Historically, it's been trading within this channel, and every time it hits this resistance, it comes back and trades sideways. So it was staging back an uptrend. We traded this in the past. I think it was a winner for us in the past. I'm not 100% sure, but based on this profit window, I think it was. It came to my attention that the fact that it broke through here, it was approaching this resistance level, and I put it on the watch list for the 26th, which was Friday, breaking this prior level, and I will trace it back all the way to very, very long time to find the next resistance. So there was actually a gap in the form of a wick, and that was the choice of my resistance level, and it actually made it through there and punched through it. Now I would say probably a natural choice should have been here, just the fact that it retreated twice around this trend line, but I actually put this, I think, after I had chosen the window, profit window. So on Friday, it staged its largest daily volume in a very long time. You'd have to go back all the way to August of 2015 to get a similar level of volume. If you look at all the daily volume here, green, 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 somebody is definitely heavily buying the stock for whatever reason. I don't know what it is. All I know is that it made a good move, took profit on it. The fact that it broke this channel here tells me that, you know, it potentially has more momentum upwards, but it could come back and check one of these levels of resistances or support to confirm and then continue upwards. So just keep an eye on this stock. There's something behind it that obviously people are interested in buying it. And with that, I'm going to stop, go back to the slide deck, and we talked about the portfolio growth, and then I wanted to move to our accuracy card. So looking at 2017 performance to date, so not just last week, but overall, we are still doing quite well. Overall profit taking accuracy is around 65 to 70%. And if you remember that profit accuracy to profit to risk ratio, this is well in the green zone of profitability. So not too concerned. Like I said, last week was kind of a wake-up call to kind of refresh and resharpen the stock picking rules, which I'll probably do more moving forward, because I don't want to start, you know, seeing this number just erode over time. I want to try to maintain around 65 level, which gives me more confidence that on the long run, you know, the list remains profitable. We had 186 out of the 284 that were profitable. If you look at the breakdown within those profitable trades, 98 of those trades were actually above the profit target. So, which is always a good thing to have, because you want to have good winners that move beyond your profit target. There's nothing wrong with doing that and holding on to a stock that's moving in the direction you want. 24 of those launches out of the 81 to 86 were actually at the target. So I took profit right at where I said I wanted to take profit at, just because that was natural resistance level. It didn't seem like it was pushing through, and sometimes it makes just sense to do that. And then there was 64 launches that were below the target, and those are the ones where they stall. Or in hindsight, I look back and I say, well, there's probably should have been a more accurate resistance level. That's what usually stops out. It could be a daily moving average, which I try to pay close attention to, but it could be also another intraday resistance. Maybe if you look at the 30-minute chart or the 60-minute chart, it might present itself and say, oh, I missed it because I built it on the daily. But for whatever reason is, when I feel that the stock is stalled or is reversing, I just take the trade. I take the profit. Now, there were a few cases I showed today where I didn't, and could have been just that I wasn't focusing enough, or I had too many things going on, or I was greedy. So it happens. I can't be 100%, you know, accurate all the time, but nevertheless, it's good to take profit. So overall, if you look at an average profit per launch, so out of the 284, you average all the profit on a profit per trade, still standing at around 4.95% profit per trade, which is pretty good. Here's how we're trending from a weekly profit taking accuracy and an average weekly profit. It does combine 2016 data, but if you look at 2017 data, we're kind of stuck between an 85% and a 43%. So like I said, this week happens to be the worst week in terms of accuracy since I started publishing it. So that's why I was a little bit puzzled, and I wanted to spend some time analyzing and trying to reflect and decide what I want to do differently. It's still healthy, but starting to become, I guess it's worth taking some action to course correct my process, or at least enforce a discipline. And especially that last week was, which I didn't publish a video, but last week was very, very strong in terms of accuracy. We had close to 84% accuracy, which was a level that haven't seen since February timeframe. So, coming from a highly accurate week to a lowest accurate week was kind of a wake-up call. So I think I showed you through some of the work, some of the analysis, what kind of things that I did wrong, and I think I'm gonna, moving forward, try to take those into consideration as I pick stocks for the next few sessions. And then in terms of the weekly profit, again, it's fluctuating. You know, obviously the anomalies we had after post-election stuff, like the market was really, really hot. But I mean, looking at 2017, hovering between probably best accurate or profit was about 10% per trade on average. Worst case was, you know, 1.5, 1.4, and you know, so 3 times we reached this level here. Still profitable for the week. Last week was very good, around 7%. A few weeks back is around 7%, and you know, 8%. But if you were to draw a line just on 2017, it'd probably be a horizontal line that averages between, you know, 1.5 to 10%, 9%, which is still pretty good. So I know it will probably happen where I'm going to have a red week. It hasn't happened yet. I think we came very close to it this week, but still remain profitable. I'm not going to be upset if I have a down week. I'll be upset if it starts to trend down for a long, you know, period of time, multiple weeks. But I'm expecting a red week sometime. I mean, it has to happen. No matter how hard you try to be disciplined, there'll become a time where you just have successive bad luck. And what I mean by bad luck is that the market isn't responding. You might do the right discipline, you might choose the right stocks, have the right profit to risk ratio, but it's just a matter of chance. Just like rolling a dice, you know, every time you roll a dice, you're not going to get the number you think it is. So I think there will be a red week coming. I don't know when. I hope to avoid it, but if it comes, I understand it, and I know why it's happening, and I know that it's not going to be a continuous trend. So keep that in mind. And currently, stocks in flight, there aren't much. I'm not in any open trades at the moment, so there's nothing to talk about here. And then the ones for waiting for launch, there's a bunch here. The oldest one is from the May 1st. I got rid of a lot of the ones that were lagging from March and April timeframe. Some of them were departed too far away from my entry point, so was it worth keeping them on the launch list? The one thing I note is that all the stocks that I have on my launch lists from prior ones that haven't launched, I have price alert triggers on my brokerage account. So I do get a text message if a stock that, you know, was on my list 3-4 months ago or whatever, 3-4 weeks ago, I still get an alert on it. As time passes, you know, if the stock departed too away from that window, it's most likely never going to hit again, unless, you know, there's a change in the reversal or a change in the interest. So I keep those alerts on me, and when I get the alert, I check the chart, and if it does look healthy, I enter the trade. But I'm not going to report it in my weekly launch list because it's not really on the active launch list, if that makes any sense. So my recommendation is, if you are tracking these stocks, keep them on your alerts. And if the alert comes, you know, a week, 2 weeks, 2 months, 4 months from now, it's probably the right setup. It was just a bad timing. So I usually find them as good setups, and I usually take them if I get the alert, even though it's a stock that's been off the official list for a while, but still in my alerts. I'm not going to walk through these. Probably if I have time tomorrow, I'm going to do the new launch list for Tuesday, and I can at that point talk about these stocks as well. But just for the sake of time, because I've been talking for a long time, I'm going to end it here with a final word of just reminding you about how to connect with me on StockTwits, on YouTube, on Facebook, Twitter, and Instagram. I'm not very active on Instagram, but I try to post once in a while some of the same information I publish on StockTwits. So if you follow me on StockTwits, I'm not publishing any different information on Instagram, but I do appreciate you if you either if you found this video to be helpful, to give it thumbs up and maybe subscribe to the channel. And the more subscribers I get, it would give me more encouragement to publish more content. So if you watch this video and you're not a subscriber, I ask you to please subscribe and leave me a note or a comment if you have any questions or if you have any feedback. I'd appreciate it. And I hope you guys have a great rest of Memorial Day weekend, and I will talk to you later. Have a good one.